Google versus Nvidia, Father Youngman versus son in football, and consumer confidence against the jobs. We'll hit those topics today. This is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So we'll start off with consumer confidence. How confident are you? You are a consumer. Consumer confidence has hit its lowest point since April. Well, April, that's only 7 months ago. It's also the coldest time of the weather since April. So, anyways, job worries are growing, concerns, bills, Christmas and holidays, Thanksgiving, costs are going up. The consumer to confidence, of course, is like, whoa, what's going on? Can I afford all this? So, we'll get into real quick. I'll just kind of say, the numbers drop. There's a scale. It's down to, 88. It doesn't really matter. I want to show you the graph that means the most to me. And I actually love this graph. Thank you, JP Morgan Chase, for putting this out. But what this shows is consumer confidence. So you can see it since 1971. It jumps up and down. The average is 84. So when you look at this graph, the thing that always shocks me, and the number that's just after the date, like when it hits its peak or trough, is the market returns 12 months later. So when you look across, you think it'd be great if the consumer's confident. That means all the numbers are high and the market's going to scream higher. And if you look historically, when the consumer is the most confident, the market has not done very well. It's like, the consumer gets super confident in January 2000, the market drops 2% in the next 12 months. There's only one exception that happened in February of 2020. Oh yeah, that COVID year, where the market was actually up 29%. 12 months later, it did drop about 35% before recovering. But I think what's really interesting is look when the consumer is the least confident. Look across the bottom of this chart that I'm sharing, and the consumer lacks confidence. Market's up 22%, up 20%, up 29%, 32%. It's crazy. It's so counterintuitive to me. But when the consumer is like, wow, things are really bad, it's getting worse, the stock market is up an average of 24% 12 months later. Guess what? If you look at the chart, this one shows October, but then November, it's flagging lower. We may not be at the bottom yet, but if history repeats itself, and it looks pretty consistent, once we hit that bottom, the stock market will take off, at least over the next 12 months. Corey, does that shock you? I know you've seen this before. It is always.
I have lots of thoughts about sentiment. I
Uh-huh.
think sentiment is like broken at this point as an indicator. I think social media has contributed to that, and I'll spare my longer spiel for another time. But yeah, no, there are lots of things that are counterintuitive, but then you get false signals as well. But it's a very interesting data point, and Mike, why do you think consumer sentiment is so low right now?
Well, I have a couple reasons. One is the influx of cash that happened in COVID, which a lot of people received some extra spending money that contributed to inflation, but also paid down bills and allowed that's gone. Like, and 5 years later, that's all gone. So I've also seen the foreclosures rates, the 90-day delinquency rate on credit cards, and we've seen the consumer credit cycle increase. And so it can only go up so high, borrowing. So I think that's running out. And then we're seeing some other factors, automotive sales going down. So a lot of things are kind of coming to a head. I will say on the good news side, the tax cuts that went in earlier this year, they went in as of whatever date that was. But early in the year, we were paying a higher tax rate. So the tax return should be a little higher come this next year. That'll be a little influx of cash, a little sugar high, not much, not enough to carry it very long. But that's why I think. And then, take the jobs, or the job unemployment's creeping up, not extremely high at 4.3%, but definitely going up. And that all contributes to like not a good feeling.
Yeah,
All
good
right.
stuff.
Well, I'll take you, this is counterintuitive. And so I'm going to go over to our update on our Elimination Tuesday, I like to call it. So the team, I covered yesterday the Verico battle, the investment sleeve, Jaden versus Dad. Jaden's in the investment sleeve with me. We had it today, so the elimination is me against my son. Goodbye, Spencer. The investment sleeve of Ankerstar Wealth obviously knows how to pick models. We know how to pick our fantasy team as well. So my son has been eliminated. I went to the football game with him on Sunday. He was checking his phone. He let me know at one point that he was 18 points ahead of me, and I was going to be eliminated, very likely. But Sunday night, my guy came through. His guy let him down, and sorry, Spencer, you are gone. So, just real quick, his quarterback, his main guy, let him down, Josh Allen. Egbuka, at least an Ohio State guy, let him down on Sunday night. And, overall, he underperformed. But one thing I like is he took responsibility. He told me, he goes, Dad, this was my mistake because I should have bid more on Jahmyr Gibbs. I missed putting in what I should have, and I would have got him, and I would have won. And so what lessons can we take financially from that? Take responsibility. Take responsibility when you make a mistake. I was glad to hear it. He didn't go all like, oh, it's this guy's fault or whatever. I should have won. He said, I made a mistake. It's my fault. I'm out. And got no one to blame but myself. So that is a lesson. If you do not, do some of the financially responsible things, save for retirement, spend less than you make, at least take responsibility for it and say that's your choice. So with that, take us to the next big battle that we're talking about, which is Google Nvidia.
Yeah, we hit on it on our show last week, Google's pathway to becoming the largest company in the world. And we just had no idea that things would be playing out as fast as they are. But Google's sitting right at a $4 trillion market cap, and Apple's just a hair above that. And NVIDIA was quite a bit above that, but NVIDIA is now falling fast thanks to Google. So here's what we've got. NVIDIA shares down about 6. They were down about 7% just a couple minutes ago, but down 6-7% today. This is on the back of news that Meta is considering, I think the talks are relatively advanced at this point, using Google's TPUs, which we hit on last week in the show, in its data centers in 2027. This is a good for, there's a few different ways to look at this. Let's look at it from everyone else's perspective. We know NVIDIA's margins are like the best of any company that the world has ever seen. So they're really sucking quite a bit of oxygen really from the room by doing that, kind of withholding all that profit for themselves. Now, of course, they are providing the tool that these companies want, and so it's kind of all good. But introducing new competitors and replacement products, or maybe even potentially better products in Google's TPUs, it could shrink NVIDIA's margins, basically help everyone out. So as this has become a reality here, that these companies are in these advanced talks with Google, Google is running their own AIs on their own chips, showing that, hey, you don't even really need the NVIDIA chips based on what we've got going on here. And so it's showing that, hey, these things are, the world will likely become less reliant on NVIDIA's chips here in the short, here in the near term. Now, Google's benefiting from this. NVIDIA is, they're kind of eating NVIDIA's lunch, right, for today's sake. Now, again, that's one segment of Google that is taking on NVIDIA head on at this point. Now, Mike, when I when I was a counselor, after school counselor in college, we played this game called Take Out the Trash. And this game, what you do is there'd be about 100 jerseys, like those little sleeveless jerseys that you pick up sports in, all around the gymnasium. And half the gymnasium would be one team's backyard, and the other half would be the other team's backyard. And you had about 2 minutes to just clean up your backyard. And by doing that, there were no trash cans. You had to throw your trash into the neighbor's backyard to get your house all clean. So now you can imagine both houses are trying to throw stuff in each other's backyard. But at the end of the 2 minutes, whoever has less trash in their backyard is the winner. Well, that's exactly what's kind of going on with Google and multiple companies now. Google is cleaning up their backyard, but they're trashing up other people's backyard. So they're trashing NVIDIA's backyard right now by releasing these TPUs and showing all that capability. And look at this. Look at Google's backyard. Man, that looks nice, huh?
That is amazing.
Yeah, that's a good backyard.
You know, I always think, you know, companies that could double or triple, and I think of those as our Ego 10. But when you look at where Google was in April, May, if you ask me, could they double by the end of the year? I would have never thought so. I would have never thought that they could double. A company that big, $2 trillion, could double to $4 trillion. It's just amazing to me. So, wow. Congrats to Google.
Mike, on that note, that's such a good note. When you look at companies who dramatically outperform expectations to the upside, there are sometimes things that you couldn't have seen in that earlier time period. Back in April, who was talking about Google's TPUs taking on NVIDIA's chips head on? Nobody, right? So things change, and you have to pick those management teams that have the capacity to create that change. So let's go look at NVIDIA's backyard. NVIDIA's backyard looks pretty good.
It's not that bad.
It's not bad at all. No, it's not bad at all. It's really good. But if NVIDIA does drop below this 165 area, I would say you're starting to see a little dirtier backyard. Let's go look at AMD's backyard. AMD was supposed to be taking on NVIDIA. AMD has the big deal with OpenAI. AMD is now trading below where it was when those deals and things have been announced. So what does the market think about their backyard? Not good. Possibly the dirtiest backyard, going from 340 down to now 190, is Oracle. Oracle, the faith that investors have in the deal that Oracle has with OpenAI and the other, the debt problems that Oracle has put on themselves, the market is not feeling very good about that. And then one last one here, which is just data center stuff, and it's been under siege here, but you got a CoreWeave down another 7.5% today, a little bit of a dirty backyard. So Google's dirtying up AMD's backyard, potentially Oracle's backyard, and NVIDIA's backyard, but they're keeping their own clean here. So
wow,
anyway,
with this theme today, maybe we go buy Oracle. It's like a fixer-upper. We'll flip that house and backyard, or maybe we should be looking to buy Waste Management the way Corey's been talking. So,
Mike, that game used to crack me up. I'm like, what are we teaching these kids? It'd be third and fourth graders, and they're throwing trash in each other's yard. I'm like, I don't even know what life lesson is here, but it was fun.
Thank you, Corey, for bringing the teaching perspective of our youth. All right. Well, thanks, everybody. Have a good one.